Right now, as we move through the middle of the trading session on Tuesday, April 28, 2026, Joby Aviation Inc. is trading at $9.16. We are seeing a significant intraday move here, with the stock up approximately 7.76% from its previous close of $8.50. Volume is picking up as the market digests a massive milestone that just took place in the heart of New York City. While most people looking at their screens see a green percentage point and think this is just another speculative rally in the electric vertical takeoff and landing space, there is a much deeper reality playing out. This move isn't just about a good day on the NYSE. It is the market finally pricing in the transition from a science project to a legitimate transportation utility. The immediate catalyst driving this price action is the successful completion of the first ever point-to-point air taxi demonstration between JFK Airport and Manhattan. If you've ever sat in the back of a car on the Van Wyck Expressway for 90 minutes, you know why the room just went silent. Joby just did that trip in under 10 minutes. But here is the insight most people are missing. This wasn't just a PR stunt. This flight was executed under the White House evtol integration pilot program and used Joby's recently acquired Blade Air Mobility operations. By buying Blade, Joby didn't just get a brand, they grabbed the existing passenger infrastructure and a customer base that is already willing to pay for time. The market expectation was that Joby would have to build a market from scratch. The reality is they just bought the market and are now simply swapping out noisy helicopters for quiet electric aircraft. If you look at the general sentiment surrounding Joby Aviation, or even its peers like Archer, the common ground for investors has been a mix of wonder and extreme skepticism. For years, the narrative was that these flying cars were forever 5 years away. Even with major backing, the hurdle of FAA certification felt like a wall that might never be climbed. Many traders using a Fidelity brokerage account or checking their positions on the Robinhood app have treated this like a lottery ticket, high risk, potentially high reward, but mostly a dream. However, the reality we are seeing in 2026 is that the regulatory wall is crumbling. Joby has cleared Stage 4 of the FAA's 5-stage type certification process. They're at 80% completion, a level no other competitor has reached. They aren't just testing prototypes anymore, they are flying FAA-conforming aircraft. Recent stock movement has been a roller coaster, and if you've been watching your Interactive Brokers platform lately, you've seen the tension. Just a few days ago, the stock tumbled over 7% because of broader geopolitical tensions in the Middle East and surging oil prices. Usually, when oil goes up, speculative growth stocks get hammered because the cost of capital is expected to rise. But there is a contrarian take here that savvy investors are starting to whisper about. As jet fuel costs skyrocket, the economic case for an all-electric fleet becomes unassailable. We are seeing institutional activity reflect this. While some retail sentiment is flighty, the big players are looking at the May 5th earnings call. Everyone is waiting to see the burn rate after that $1.2 billion capital raise back in February. Institutional ownership currently sits near 49%, and while we've seen some small-cap funds trim their positions, the core backers like Toyota and Delta Airlines aren't moving. In fact, Toyota has been increasing its stake. This is a massive tell. When a manufacturing giant like Toyota puts more chips on the table, they aren't betting on the cool factor of a flying taxi. They are betting on the manufacturing scalability of the S4 aircraft. This is no longer just about one plane. It's about a factory in Ohio and a commercial launch in Dubai slated for later this year. Speaking of the trading environment, the volume we are seeing today is telling. We've already cleared hundreds of thousands of shares in the first few hours of trading. Investors are actively using online investing tools to position themselves before the Q1 results. The tension between the $7 bear cases from firms like Deutsche Bank and the $18 bull cases from H.C. Wainwright is what creates this volatility. The bears say the company is burning $500 million a year with no revenue. The bulls say you are looking at a company that is about to disrupt a $1 trillion urban mobility market. I want to hear from you on this. Comment below how many shares of Joby Aviation you currently hold, or if you're waiting for that final FAA certification before you jump in. It's a polarizing stock, and I'm curious where this community stands on the risk-reward balance right now. To understand why $9.16 matters today, we have to look at what Joby actually is. This isn't a drone company. Their S4 aircraft is designed to carry a pilot and 4 passengers at speeds of 200 miles per hour with a range of 150 miles. Their business model is dual-pronged. They intend to operate their own ride-sharing service, think Uber in the sky, while also selling aircraft to partners. The integration with the Uber app is already in the works, meaning when this goes live, you could theoretically book a Joby flight through the same interface you use to call a car. This app-to-air integration is the reality that is exceeding the expectation of a fragmented, difficult-to-use service. Past performance hasn't always been pretty. The stock is still down significantly from its 52-week high of $20.95. We saw a massive slide in late 2025 as the market lost patience with the certification timeline.
But this is the classic trough of disillusionment. Investors got bored right as the hardest work was being finished. Now that we are in the type inspection authorization phase, the data coming out of these test flights is what will drive the next leg up or down. If the FAA finds a flaw in the fly-by-wire redundancy, the stock could see a 30% haircut in a single afternoon. If they pass, $9.16 will look like a gift in retrospect. Looking ahead, the catalysts are lining up like planes on a runway. We have the May 5th earnings report, where management will likely provide an update on the Dubai launch and the progress of the California manufacturing facility. Then there is the Stage 5 final hurdle with the FAA. This is the compliance flight testing conducted under direct agency oversight. Once that type certificate is issued, the game changes from can they do it to how fast can they scale. We also have to consider the macroeconomic pressures. While the S&P 500 has been hitting record highs, speculative tech has been under the microscope. If the Federal Reserve maintains a restrictive stance, the online investment crowd might stay cautious. However, for those looking at self-investing strategies through platforms like SoFi or Schwab Intelligent Portfolios, Joby represents a unique idiosyncratic play that doesn't necessarily move in lockstep with the big tech giants. It is tied to a specific regulatory outcome. There is a risk that infrastructure lags behind the technology. Even if Joby has the planes, where do they land? This is why the partnership with Rubin Brothers to build a vertiport in Los Angeles is so vital. The reality of urban air mobility is that it requires physical real estate. You can have the best electric motor in the world, but if you don't have a pad at Century Plaza, you don't have a business. Joby is solving this by securing these moats in high-traffic corridors before the competition can even get their prototypes off the ground. As we look at the future outlook, we have to weigh the possibility of a buy the rumor, sell the news event. We often see stocks rally leading up to a major certification, only to dump once the news is official, because the reality of a multi-year scale-up process sets in. Investors need to be disciplined. Whether you are managing an individual brokerage account or using Fidelity Wealth Management, you have to ask if you are here for the trade or the decade. The volatility isn't going away. The intraday swings we're seeing today, up nearly 8%, are par for the course in this sector. To wrap this up, the contrast between expectation and reality with Joby Aviation has never been sharper. The expectation was a speculative startup with a long road to nowhere. The reality is a company flying real passengers in the most complex airspace in the world, backed by the world's largest automaker and a major U.S. airline. Today's price of $9.16 represents a growing confidence that the impossible is becoming inevitable. We've seen the transition from Stage 4 clearance to active NYC flight demonstrations, and the market is responding to that tangible progress. The central insight here is that Joby is no longer just an aerospace company. They are a logistics and infrastructure company. By securing vertiports and acquiring existing operators, they have shortened the distance between certified and profitable. While the cash burn is high and the risks of regulatory delays are ever present, the momentum is undeniably shifting. The expectations were grounded in the struggles of the past. The reality is taking off in the present. Keep a close eye on that $9.20 resistance level as we head into the close. If we break and hold above that, the narrative for the May 5th earnings call could get very interesting. Whether you're using a Robinhood trading platform for quick moves or Fidelity IRAs for the long haul, Joby is a case study in how a company can bridge the gap between a futuristic vision and a practical, scalable business model. The next few months will decide if this $9 level is a floor or a ceiling, but for now, the bulls are firmly in control of the cockpit. Stay sharp, watch the volume, and remember that in this sector, the only thing that moves faster than the planes is the sentiment. Authority in this market comes from recognizing when the story changes before the price does, and with Joby, the story just changed in a big way. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.